Hey everyone, welcome back to the channel. This is your weekly review for August 10th through 14th. Quick reminder before we start. This is educational. It's how I read the market with the Conflux method, not a signal service and not financial advice. Trading futures and options carries real risk, so take this as a walkthrough of my thinking. Let's get into it. First a look back at last week, then the week ahead. Let's start as usual with last week. We caught good longs on both the euro and the pound right away, just as I said in the last weekly review. But it turned out that price ran straight off the upper zones without working the lower ones. The best trade of the week was on gold. Even though I'd said I was expecting gold lower, an interesting balance with a squeeze formed, and a zone appeared that you could work longs off, and I managed to catch almost the entire move up. On silver, just like on gold, you could then have worked a little into shorts from the zones above. But I decided to skip that because of the strong trending move up. On the S&P 500, I also posted an idea with a sharp move up because of the open options. But I couldn't get into the trade, since the method didn't give an entry point. Now let's move to the week ahead. And let's start with silver. For now, the plan is to work it like this. If they pull back, in the clusters, the 60 zone is the better confirmed one. A spread also went in at 92 to 100, and right now on the chart, you can see the same accumulation as back in September, before the move up. An interesting coincidence. I'll be putting my buy takes onto that spread if they let me in. Above, I'll also try to catch shorts if Monday opens with a rise, since it's still unclear on the agreement between the US and Iran. At the 60 level, besides the confirmation from the clusters, there's also an intersection of two Fibonacci grids and the strongest reaction level zone together with Renko and P/F. Now to gold. It's simpler here. I'll be watching the open. If it goes through the top, sells off 4,532. If they come out even higher, to the 10% zone, then after an impulse forms, I'll look at sells there too. With buys, it's even simpler. 4,223 looks great. And the contract's maximum volatility is at 5,250 right now, if silver does go to 100. It's also interesting to take a look at platinum futures. I often watch platinum as an indicator for spotting a nascent trend, and here, there's no reversal in sight at all. That's a bit concerning, but we'll see. Now to the S&P 500. A very big hedge went in here. Really very big. If there's a decline, I'll work with futures in the 7,600 to 7,650 and 7,500 to 7,550 ranges. That is where there are reaction level zones. Here's the markup on the December contract. Ideally, these portfolios already come with a future, but they can go in without one if they intend to buy back lower. So they've highlighted for us with the options what to work with and also where to sell in a reversal from the upper portfolios. That's the plan for the week. Remember, these are zones and scenarios I'm watching. The market decides, not me. So let price come to your levels and let the confirmations line up before you act. If this breakdown was useful, subscribe and turn on notifications so you don't miss the next weekly review. And drop a comment with the instrument that you want me to cover. And one more time, so we're clear. None of this is financial advice. I don't sell signals and I don't promise profits. This is educational content about the Conflux method, and everything here is my own view of the market. Trading futures and options involves a substantial risk of loss, so never risk money you can't afford to lose. And always do your own analysis. Take care, manage your risk, and I'll see you in the next one.